The Bureau of Statistics says the April CPI indicator stayed at 2.4% annually, while the RBA's preferred measure, the underlying rate, ticked up slightly to 2.8%. But both are within the RBA's 2 to 3% target band and have stayed there for at least 5 months.
It shows that the progress that we've made together as Australians on inflation has been substantial and it has been sustained.
Temporary government assistance, both Commonwealth and state, has kept some prices down for now, including electricity, which the ABS says would have been 1.5% higher without the rebates. Petrol, meanwhile, is also down on this time last year. Other essentials, though, are rising and many above the rate of inflation. Fruit and veg up 6.1% annually, chocolate 5.4% and eggs nearly 19% more expensive, with shortages impacting supply. Rents rose 5% in the 12 months to April, but that's the slowest growth since February 2023. Medical and hospital services climbed by a similar amount, driven by health insurance premiums, while holiday and accommodation prices also climbed by more than 5%. Still, economists at Westpac say the overall result is consistent with the Reserve Bank's forecasts, but expect a rate cut after the more detailed quarterly CPI data, which will be out at the end of July.
It will give the Reserve Bank Board more confidence that inflation is behaving as, well, that it is coming down, and the risk of inflation reaccelerating is kind of diminishing, and that's why we expect the Reserve Bank Board to cut 2 more times this year. Whether they'll cut in July, I don't think anything in these numbers would be a red flag to the board and say we cannot cut if, for instance, there's a major shock to real activity coming from US announcements.
Westpac agrees with the RBA that global trade policies will be disinflationary. The Australian share market lost ground after the data was released, though, despite a strong lead from US markets overnight as trading there returned following the Memorial Day public holiday. The ASX 200 down 0.1%.
It's partly because of the, bit of a rally fatigue, and also tonight is an all-important immediate result. So market's a little bit nervous about what that result might say.
The artificial intelligence chip maker is the world's second largest listed company, behind Microsoft. Here, the tech sector did well, but energy did better. That's after Woodside surged after the federal government approved its extension of its North West Shelf project. The miners fell, while the day's best performer was business-to-business travel website Web Travel, following ongoing demand in the US.
We don't normally call out individual markets, but we're making an exception this year, primarily because of geopolitical issues and the impact it appears to have with some other publicly available information. Clearly, whatever is happening in the globe is not impacting us.
Bookings are up 29% on the same time last year. In currencies, $1 Australian dollar is buying around 64 1/3 US cents and is down against most of the other major global currencies, including the New Zealand dollar. That's as its central bank cut official interest rates for a third time this year to 3.25%. Inflation has risen in the country, though, but remains within the bank's target band, despite high uncertainty about the impact of global tariffs.
There is potential for tariffs to reduce economic activity and inflation in New Zealand, but we don't know exactly how this will play out yet. It will take some time for lower interest rates to have their full effect, particularly given higher global uncertainty.
5 members of the committee voted to cut rates, while 1 didn't. The Reserve Bank of Australia has held off on publishing unattributed votes here and is discussing how it'll do it with the Treasurer. And there's been a surge in the number of insurance claims relating to the mid-North Coast and Hunter floods to over 6,000, the majority for property damage. The Insurance Council of Australia says that's a 20% increase on yesterday, and it follows the setup of new insurance hubs in the area to help customers with the claims process.